What in the world is going on, guys? Holy crap, look at that. The markets are green. We got to break them down in this video. We have to also talk about 10 stocks that I'm looking at now. And of course, we're going to break down, I have a dog hair in my mouth. What the heck? We're going to break down what I'm doing in these markets and my thoughts on everything. And before we do, make sure to get your free money from Moomoo. You get 5 stocks up to $3,500 and a free share of NEO guaranteed. All you have to do is deposit at least $100 using my link down below, and boom, you get your free stocks just like that. And with that being said, let's jump into the video and let's break down what is going on right now in these markets before we talk about the 10 stocks that I do have for this video. So look, guys, the markets are up in a major way right now. We have the S&P up 2.3%, the Russell's up 1.4%, Nasdaq's up 3.3%, as the Dow's up about 2%, and we have the VIX down 7%, gold's down over 2%, and silver's down about 0.8%. So overall today, guys, volatility is down, hence why the VIX is now under 30, and again down about 7%. We have the metals down, so there's not much fear in the markets, or I mean there's still fear in the markets, but we're slowly seeing that fear decompress in terms of the metals. And we have crude oil down over 7%, sitting right around $95 a barrel. And going back over here to SPY, take a look. Again, it's up 2.3%. Look at what's going on this 20-day chart. What you guys are noticing is it's well above both moving averages now. We took out the highs from yesterday as well, and it seems like we're about to test. We might not, I mean, we're probably not going to break out of it considering we only have 5 minutes left in the session, but we're approaching 428, which was the high from, when was this? Monday, or maybe last week, last Friday or Thursday. I think it might have been last Thursday. The high from that day was right around 429, and we're currently trading a little bit under 427. So if we end up breaking 429 tomorrow, we might run and test the highs here from 2 days ago, 2 trading days ago, being on Friday at about 433. If you guys remember, we pumped up to that point in the pre-market. So yes, this is a good sign that we are breaking the moving averages, but in the grand scheme of things, guys, we're still trading well within this wedge. We're still in a downtrend. We've been making lower highs, and that is not broken quite yet. Hence why I have my alert set at 435 and 440. If SPY is able to break those points, we might end up breaking out, but we're not there yet. And we do have the Fed meeting tomorrow where we're going to get most likely a 25% or 25 rather basis point rate hike. So watch out for that tomorrow. We'll be making a bunch of videos on that, so stay tuned. Make sure to subscribe and hit the like button. And pretty much everything I just said applies here to Triple Q. Actually, now that I'm looking at it, it does seem a little bit different. SPY is above both moving averages on the 20-day chart, whereas Triple Q is not. We're actually fighting with the 180 moving average right now at about 328, and we're well within the downtrend. Like SPY, that's one thing they do have in common, guys, is we're still in a downtrend and we're still at a lower high. So for Triple Q to reverse, it's got to break 340 at least, and quite honestly 350 to 355, which obviously based on this chart we are nowhere near those levels. So hold tight, guys. Don't get too excited because we could be seeing more red, and this could very well end up being a dip buy for SQQQ, which goes up 3 times what Triple Q goes down. So let's say Triple Q goes down 2% on the day. We're going to have SQQQ up 6% since it's a 3x bear ETF that tracks Triple Q. So watch out for that. I mean, this very well could be a dip buy. We don't know yet, obviously. But watch SQQQ in the mid-40s. Quite interesting. Maybe it could make a move back to 50, maybe even higher than $50 per share. So let me know your thoughts about that in the comments. And if you haven't done so already, guys, make sure to get your free money from Moomoo. You get 1 free share of NEO and 5 stocks, up to 5 other stocks, each of which could be valued up to $3,500. Use that link down below, deposit $100, and boom, you get some free money. And now let's talk about these stocks. 10 stocks in particular that I'm looking at, which a lot of these setups look pretty decent considering the market, the crazy market that we're in. So stock number one is none other than Johnson & Johnson, ticker symbol JNJ. And not to toot my own horn, but we kind of did call this out a couple of videos ago, maybe about a week ago. I forget exactly. I make so many videos, guys, at this point, I couldn't pinpoint what video I said what. I mean, that's going to take forever to me to even go for me to go back and look into that, and it's not even that big of a deal. You guys that watch the videos, you know that I did call J&J out at about 173, and I mentioned if this breaks, we're going to fill the gap up to about 180, or at least we might fill the gap. Nothing's guaranteed, as you guys know. And you even see the oval here from my last video, so it looks like I did talk about this about a week ago, maybe a little bit over a week ago. So today, J&J's up 2.5%. It broke out of 173. Obviously, now we're trading at about $176 a share. And even though it's a bit overbought, we might be a bit stretched here. I think ultimately it's getting to $180 at least, maybe 179 and $180. And if that point breaks, we're going to be at fresh all-time highs, I believe. Let me double check. Is J&J? Yeah, J&J's all-time highs are right around $179.90. So if we fill the gap to 180 and we break that point, I see a leg up coming, and you've seen a lot of these healthcare stocks in general. I mean, we'll talk about AbbVie here in a second. That thing has been on fire. So J&J is looking good, and this is one of those stocks that a lot of people consider a value play, a safe play. If we're going into a recession, you want to own J&J. That's the type of stock that it is. So I think in this environment with all this fear that we're seeing, volatility, this is a decent pick. It's a decent pick. And as always, I'm not a financial advisor. I'm not telling you what to do. All I'm saying is we could be getting a breakout above $180 a share. And there goes the market. We just closed. We had the NASDAQ close up 3.1%, Russell up 1.4%, S&P up 2.1%, Dow up 1.8% as the VIX went down 5.7%. So pretty nice, juicy green day today all across the board, guys. Let's talk about the next stock, which is MOH, Molina Healthcare Inc. This is one that I believe is on the verge of breaking out. I mean, it's already been doing well. It went up 6% just today, up about $20 a share. But if you look at this chart on the 4-hour, what we're noticing is an ascending triangle. Higher lows have been made since the end of July, but we've been struggling at about what? 325, 330 since the end of 2021, which now we're slowly starting to peak above that point. So I think if we get a clear-cut break above, let's say maybe 330, I'll put my alert right now at $330 a share for MOH. If we break that point, let's take a look on this 3-year chart. Where could this go? I mean, this is probably going to hit all-time highs. I mean, we're already, actually, now that I'm looking at it, we just hit an all-time high today. So this rally could continue, guys. If we break 330, who knows where this leg up could take us. We're going to be in uncharted territory. That's the truth. So watch out for MOH. Crocs is another one. If I could even talk today, guys. CROX is Crocs's ticker symbol. Today it went up 7%, so I did see it on some of my scanners, you know, because it did go up a decent chunk today, $4.73, and it closed above $72 a share, and it recently actually got under 70 a share, so we're back over 70 a share. And just looking at this 4-hour chart, you're going to be like, Stas, you freaking idiot, this stock looks awful. And I agree, it does. The chart looks like crap. The stock is down, what, 62% since $183, which was, when was that? The middle of November. So yes, the 4-hour chart looks awful, but if you peel the layers back a bit, the 3-year chart looks pretty decent. Again, we're down 60%, but then again, we were way overvalued. Let's be honest. This stock went from $8. I didn't even realize this till now. Crocs was $8 a share back in the March 2020 crash. $8 freaking dollars, guys, and it went all the way to 183. We're talking almost a 2,000% return. So if you see a stock go up 2,000%, do you think it's unreasonable for it to go down 60% after that? I don't think it is at all. We're still up massively from those levels that we were at just 2 years ago, under 2 years ago. So at this point, maybe buyers step in around $60 right by the 180 moving average on this 3-year chart here. And if you look at the max chart here, which shows the price action since the early 2000s, you're noticing it's approaching key moving averages as well, right around 50, $55, 60. So I think Crocs buyers could step in any minute now. You know, it might not happen next week. It might not happen a week from now or 2 weeks from now. A couple months from now, I think it could happen. So watch out for CROX. This is one that's just way too beaten down. And earlier in this video, I did allude to ABV, ticker symbol ABBV, which is up just a ridiculous amount over the past couple of months. Just back in, when was this? September. The stock was $105 a share. We just hit 156. It ran up about 50%, a little bit under 50%. So the stock's killing it. We're clearly bullish. In fact, we just hit a fresh high on the 4-hour chart today. So I'm looking at this as any pullback we see, whether it's 5%, 6%, couple percentage points, I think it's worth watching, just considering the trend is very bullish when overall, if you look at a bunch of stocks in these markets we're in, they're not looking bullish. That's as simple as it gets there. This is very bullish. Markets are not right now. So I'm going to look at good charts, and this is a pretty good chart if you ask me. And if we see a pullback towards mid 140s, I'm going to be looking to pick that up as a swing trade. Marvell is another one I'm looking at, MRVL. This one up 9%. It triggered my alert as well, or my screener. I found it in my screener. And we notice it's trading in a wedge. We're also noticing a prominent head and shoulders. Left shoulder, head, right shoulder. You guys can see the whole 9 yards, right? It's not looking good. I mean, I don't want to say it's not looking good, but it's not looking fantastic either. But I do believe if we do start breaking out of, let's say, $70, that is where Marvell could really start gaining some steam, especially if it takes the wedge out and the 180 moving average, which just happens to be right around $70 a share, guys. So I'm not excited about Marvell yet. Well, I guess the fact that it is down about 30% from these recent highs, that is something to be excited about. But as a trader, from my trading perspective, I want to see it break out first. So I'm going to put my alert at $70 a share. We're going to be watching it from there. Mark is at or above $70. Boom, another one that I took my eyes off of, I'll be honest, guys. And I was watching CNBC earlier today, and they talked about Adobe, and I was like, oh my God, I forgot about Adobe. Adobe's one that I was screaming, it's so overvalued. I'm not touching it when it was at 700, 600. And I was saying if it gets down to 300, if somehow it gets under 300, I would be a heavy buyer of Adobe. And I looked at it today and I realized, holy crap, we're getting there. The stock's at $420 a share. Today it went up 2.5%. That means it is down 40% from that $700 all-time high that was hit in the middle of November. So Adobe's getting there, guys. If it cracks under 400, I'm going to be very intrigued by this one. I might nibble a little bit. I would love to buy even more in the lower 300s. I got to look at my numbers again and my analysis of the stock, because I did run some numbers a few months ago, and again, I forgot about the stock. So yeah, it's getting there. It's getting there. And looking at this 3-year chart, it looks like it's holding the 180 SMA as of right now. So as a trade, maybe we get a bounce off this point. That'd be interesting to watch out for. And let's take a look at the max chart. I want to see what that's looking like. You all can see, oh, look at that. We're also looking pretty good on the max chart. 50 SMA is right where we are right now, $400. So although I would love it at 300, 250 as a long-term investment, that's a valuation that makes sense to me. As a trade, it might bounce at 400 and we can make a move back towards 500, and that could be, how we make money on it. So we have to watch out for Adobe. NVIDIA is another one that's in a very interesting spot right now. NVDA is the ticker. Today it went up 8% as the markets, like I showed you guys, did very well today, right? NVIDIA crushed it. Now we're trading right under the 180 moving average and the highs from last week being around 230 to 235. So if we take 235 out, maybe we see a short-term run to 245, 250. That's the next gap that has to fill here. But overall, going back to that 4-hour, like I said, a lot of these charts are looking wonky. We're noticing a descending triangle. So that makes me a bit worried, because ultimately, if we break under 210, this could free fall back to the 180s, 190s, no problem. But if we take out 235 and into the 240s, 250s, that's where we could reverse as a trade. And let me make this clear. I'm only looking to trade this thing if it breaks out of 240. I'm not looking to buy it as a long-term investment, because I recently said I would want to buy NVIDIA at a much lower price. And that's what I've been saying, gosh, for months, maybe over a year or 2 years on this channel. So NVIDIA, if it breaks out, I'm looking at it as a trade, and that's if it breaks 250 and maybe even higher. But if it gets down to 150, under 125, that's where I'm going to be looking at it as an investment heavily, guys. I'm definitely going to be buying it at those levels. So that's NVIDIA, JWBN. I'm looking at this one. It's up 2%, and this one strictly for a trade as well. We ended up reporting earnings last week. The earnings crushed it. This stock went to 27. We saw a pullback, which makes sense considering it ran up so much in one day. We saw about a 17% pullback. We're playing off the moving averages now, and the stock went up 2% today. So it seems like buyers are pushing it above both moving averages, and we might end up filling the gap. No joke, guys, by the looks of it. This might fill the gap back to where it was post earnings about 10 days ago. So it could go back to $26.50, $27. There could be another 8, 9, 10% upside. So watch out for JWN. And now that I'm looking at it, if this breaks out of what is this? $28, there's a wide open gap to about 30. And then if $30 breaks, this could end up going back to maybe 36, 37 a share. So watch out for it. Another one I'm looking at for today, guys, is MPWR, Monolithic Power System. This one up almost 10% on the day. Another one that I saw in my scanner. And that's important, guys. You shouldn't heavily rely on a scanner. That's not how I've traded for my career. You know, I look at it here and there, but I also look at a bunch of different stocks that I like to track, and I set price alerts. That's why you always see me creating alerts, and once my alert hits, you get notified on ThinkOrSwim, and you can go and look at that stock, and you see the chart, and you get reminded as to why you put that alert. So in this case, I think I did have an alert on MPWR, and it hit. And this looks pretty good right now. We're noticing a bit of a double bottom, kind of, at about 375. We bounced off of that. We're now at 420, again, up 10% on the day. And if we look on this 3-year chart, this looks like the uptrend is continuing. We are a little bit under the 50 moving average, which is it's a bit worrisome. I mean, not the end of the world, but I would like to get back over the 50 moving average. And now that we're noticing a double bottom at the bottom of this channel, let's see if we can start breaking into the mid 400s. That's where I think a reversal could really start to occur on MPWR. And the last one for today, guys, is MCHP, Microchip Technology, up over 5% on the day. And let me tell you this, it's still downtrending overall on the 4-hour chart. It's under the main 180 moving average, but if that breaks in the mid 70s, let me put my alert there right now, that is where we could be getting a reversal. And look at this 3-year chart, guys. It looks pretty decent. 3-year chart shows we are holding the bottom of an uptrending channel right now, kind of similar to the one we just saw with MPWR. So I have my alert at 75. If that point breaks, again, it looks like we're smooth sailing to about 80, which is another resistance. So 75 to 80 might be the next gap. And then from $80 towards 85, 90, that's where this thing could end up going. So overall, guys, those are 10 stocks that I'm looking at right now. I hope you guys enjoyed this video. If you did, make sure to smash the like button, subscribe, drop me a comment, and join my Patreon if you want all my real-time buys, sells, call-outs, morning videos. If you want to work with me one-on-one more throughout the day, more access to me, and you get private Discord access, that's linked down below on Patreon, or you guys can go to StockSurfFast.com/Patreon and make sure to get your free money from Moomoo. Use my link, deposit $100, and you could get up to 5 stocks, each of which could be valued up to $3,500, and you also get 1 free share of NEO guaranteed. So it's free money, guys, guaranteed, again, using that link down below from Moomoo. I'll catch you on the next video. Thanks for watching. As always, peace out.